Thomas McGlynn, welcome to Property Insights.
Thanks for having me.
You're the CEO of BresicWhitney.
Yeah.
A great organisation. I mean, I've been a big supporter of them for many, many years, particularly in my area around here, the Darlow area, but I know you guys cover a lot more than Darlinghurst, but quite preeminent in the Darlinghurst, or Eastern Sydney, let's call it East Sydney area. As CEO of an organisation like that, you've been an auctioneer, you've pretty much done everything in the industry. As CEO of an organisation like that, though, what are you guys doing for your vendors in relation to advising them or telling them where they should sell or they should, assuming that they can make the decision to sell at any time? What are you telling them? What's your organisation telling them in relation to where the market is right now?
Well, the thing about the Sydney marketplace probably in the last 3 years since COVID is it's changed so much, probably like every 6 months, which is really unusual. So I don't know, I've been doing it since probably mid-2000s, and in that time there's only really been a couple of boom times and a couple of down periods, where in the last 3 months we've seen stock prices and stock go through the roof. So we've seen a lot of different changes. I mean, Domain put some interesting data out saying there was mid 5% growth over the last quarter, and so a lot of sellers are reading that thinking it's
a year on year or quarter on quarter?
Last quarter, 5.3% growth.
Are we talking Sydney?
Sydney.
Yep.
Yeah. So a lot of sellers are reading that and saying that maybe it's a great time to come on the market. In actual fact, in the last 6 months, we probably saw a mini boom, so to say, considering the back end of last year, it was, fairly tough out there for sellers. Good time to buy, but tough for sellers. So I would be saying if you're thinking about selling, it's a great time to come on because there's probably going to be a lot more property on the market at the back end of the year.
Are you of the cohort of people that are expecting, because it happens seasonally anyway, but much more property started to sort of trickle into the system for sale or for auction or whatever it is, post the end of August, for example, like early spring?
So a really good example of this is across the June-July period, we listed 3 times more in those 2 months than we did for June-July last year.
Wow.
Now, a lot of that property hasn't yet hit the market yet. What we mean by that is hit the major portals. And so their agency agreements signed and people have committed to come to market, but they haven't yet come on the market.
They're not advertising.
Yes.
Yeah.
And so that's information that CoreLogic and all the other data collection analysts don't have.
So just take me back. What's the number? Say it again. Say
triple the amount of property.
Yeah.
Across June and July
that you've signed up for sale
compared to the same period last year,
but not actually yet in
advertised.
Domain or realestate.com or wherever yet, not just
what
yet.
we call on portal.
On portal.
So that gives you a really good understanding of what's probably coming.
So is that 3 times? Are you saying that, say, 1 September or something, that these things will be on the Domain and realestate.com portals and whatever other portals they want to advertise on?
Yes.
From close to September?
Yes. And some people might say, that's because your organisation is performing strongly. There might be a little bit to that.
Yep.
But there's generally a lag-on effect, because if we perform strongly and those properties start coming to market, that's a bit of a knock-on effect for the competitors as well. So if we're listing quite a bit, the chances are that the competitors are also probably listing quite a bit. Now, this day and age, people tend to prepare their property before coming to market. So there generally is about a 3 to 6 week lag where people might be doing small renovations, repainting, recarpeting, all that different sort of stuff. So all the data we're seeing is pointing to there's probably going to be more property this spring on the market than there has been for the last 2 to 3 years.
What was the reason why the beginning of spring last year, you're expecting, just in your firm at least, there to be a third of what you're expecting to see next month? What do you think that was last year? Because the interest rates started going up already. Is the reason because people? Do you think is the reason because people think it's a really good time to sell? I'm going to get a good price, but I want to sell because I'm sick of the mortgage rates. I mean, what's the interaction between people just want to profiteer or maximize or optimize their price? What's the interaction between that and, listen, we've got to sell this property because the interest rates are killing us?
Well, but this time last year, people were uncertain about how many interest rate rises there was going to be. And I think a lot of people were untrustworthy of what the Reserve Bank were saying at the time, given that the statement had come out during COVID that there was going to be 4 years of historically low interest rates, right? Now, I understand in retrospect that interest rates are still relatively low historically, but not for what the period the last 3 or 4 years. Yeah. So I think a lot of people, both buyers and sellers, just sat on their hands across the winter and spring period last year, waiting.
Just sweat it out.
Waiting to see what was going to happen.
But are they sweating it out? Are these people with mortgages? Like, are they?
Well, I think I've seen some comments from you in the media, Mark, saying that at some point it has to have an impact with regards to cost of living for a lot of people. And I know a lot of people did extend themselves, because I'm at the coalface calling auctions on a Saturday, and I've seen people extend themselves over the past 2 to 3 years. So, look, I think what we're seeing now is that there is a little bit of a mixture of a stronger market for the last 3 to 6 months, which gives people confidence to come to market. But that's probably, at the same time, operating alongside people starting to feel the pinch a little bit. And I just think for 6 months last year, people wanted to see whether or not things were going to be, short term, medium term, or long term in terms of interest rate rises. And that's probably why a lot of people weren't coming to market last year. It's also why a lot of people weren't buying.
So if you just go back pre-COVID, when you say, you're expecting a fairly big uplift in on portal listings next month, for argument's sake, relative to a year ago, but if you say relative to 2019, like when the market was sort of normalised, let's call it normalised, is it sort of similar or much bigger, or what?
And this is the thing you have to think about, because we've been in a
weird situation,
not a normal marketplace for probably 3 years now.
Yeah.
And we're now going to be coming into what I would say is a traditional Sydney spring,
right,
which traditionally has always been the time when the most amount of people want to buy and the most amount of people want to sell.
Why do people want to buy in spring? And why do people want to sell in spring? Is it more sunny? They've got north aspect and the sun's up there for longer. What's the deal?
I don't know. It's kind of like saying, why are auctions so popular in Sydney but not that popular in Perth? I think it's just always been the case. I do think that sellers do believe their properties are going to look better in spring, and so just if you think about that, more properties coming on, the more people then come out of the woodwork thinking we want to buy. So I don't think there's actually a lot to it.
Maybe it's just a traditional rhythm.
And I do believe that real estate operates a lot in that sense, which
right,
there's not a lot of science to it. It's just something that people were creatures of habit. So it is a bit of just a rhythm.
Maybe everyone's overseas in Europe and they're A, they want to sell while they're away, and B, they don't want to buy while they're away. Half of Sydney seems to be in Europe at the moment. And it could be something to do with that, or people just tend to knuckle down during the winter months and want to open up the shoulders come spring.
Well, if you look at a lot of the salubrious markets, especially say in the eastern suburbs and along the shore, that definitely is the case. School holidays do play a significant part in the way that happens, and maybe the rest of the market has just sort of gone along with that. What has been interesting this year, and I agree, it does seem that half of Sydney is over in Europe, but June and July have been unseasonably strong in terms of sales. So
relative to last year or COVID?
I think
pre-COVID, I should say.
I think even pre-COVID.
Wow.
Yeah, because the seasonality was a lot more pronounced pre-COVID. I think that was a big thing, that COVID changed the way that people look to interact with property, not only with when they're looking to buy, but where they're looking to buy. So that's something that I think is going to stay with us for a longer period of time.
Can you just remind me, refresh my memory, which parts of Sydney that BresicWhitney is covering?
So traditionally, like, we're a 20-year-old business, and so a lot of the times that you've been engaging with the business, we would have been sort of within 5 kilometres of the CBD. Within the last sort of 5 to 6 years, we've sort of branched out to probably 10 to 15 kilometres of the CBD.
North, south, east, west?
Yeah, so most of the lifestyle regions that are hugging the harbour, you might just say.
But if I was to say, like, in terms of concentrated environments, so where you're concentrating your business, so where your best data points are, you might be doing a deal in, I don't know, what's 10 kilometres, Des Moines, but you might only do one deal or two deals. Is the concentration of your data points more in any one part of Sydney?
So we're number one market share across 21 or 22 suburbs in that sort of 10 to 15 kilometre radius.
Wow.
So we'll sell anywhere between 1,100 and 1,300 properties, depending on what the market does, and
per week or per month or
per year. So about $3 billion worth of real estate. Right. So the thing that's different about us too is because we're not a franchise and we're not a single operated business, we have access to the data point real time. Some of the bigger franchise groups, they get access to the data, but it takes a while for it to filter through. So I think if you're looking at what we're seeing, that you've got that 10 to 15 kilometre radius of the CBD, so anywhere from Hunters Hill round to the Long Shore, Mossman, back into the eastern suburbs, and down sort of around Alexandria, Erskineville, and back around the inner west. That's pretty much where we're seeing things happen, which traditionally, like say, for example, Paddington is a market where we sell 4 in every 10 property in that suburb. That's a marketplace that has always been the first to experience some difficulty, but it's always been a market that's the first to also see the benefits of what's to come. And so we tend to look at Paddington in terms of what the overall trend for the rest of the market is going to occur, because you do have fairly affluent people that are buying and selling in that area, and who have got access to a lot of information. And certainly, say in Paddington as a marketplace, over the course of the last 6 months, you've seen a lot more activity than what you saw for the previous 6 months. So
a year ago, I was involved in a property that was being sold in Paddington a year ago. I think it was a year ago. It took about 9 months to sell. Good terrace joint, blah, blah, blah. It was unusually slow. And it was hard to get a price, it was like gouging from the buyer. Are you saying that's now changed?
It's definitely changed.
It's kicked up again.
And it changes on a dime. And this is the thing about, I think, what we've seen post-COVID. I mean, the media's played a big part in this because, the accessibility to information today compared to even 15 years ago, you can get real-time information straight away. You're not waiting for the Saturday paper to come out with auction results or whatever that might just be. So, I think that, within the last 6 months, Sydney's kind of been a bit like a jet ski in terms of it can move really, really quickly in both directions. And, I think that last year, if you're a courageous buyer looking to buy when no one else was, you could have bought fairly well and probably reap the rewards of a sale. There's been sales over the course of the past 2 to 3 weeks where people traded in 2022 and actually have made significant profits.
Wow.
Trading in 2023.
You're talking about Paddington now?
Yeah, because if you look at that period from the middle of last year to the back end of last year, in many of these salubrious markets like Paddington, we probably saw the market come back 20%.
Yeah. That's my understanding, 20% down.
And that's not reported a lot because you're generally reporting the averages, right? But in the last 6 months, it's probably gone ahead 30.
Wow.
In many instances. And, middle of last year, you could buy a terrace for maybe high 2s, a 3-bedroom, 1-bathroom terrace. Now they're pushing up into the mid to high 3s, those same properties. Wow. So, that can be pretty confusing for buyers.
That's crazy metrics in terms of the delta in price. I mean, that's sort of a little bit out of control to some extent. What about where are the? Can you pick out another really good performing area from Paddington? Because Paddington is a little bit special. Where's another really good high performing area that's performed well, for example, in the last 12 months, from a vendor's point of view? I'm talking about now.
Well, we talk about the emergence of the luxury home in the inner west, which has generally not been something that people have talked about.
What does that mean?
So what I mean by that is properties that are traditionally selling for more than, say, $5 million. And in areas like Marrickville, Haberfield, all the way around into Annandale, there's always been beautiful homes in these areas, but it's generally been locals that have been buying these homes. And I think what's happened post-COVID is people are really looking at what they can buy and what the lifestyle of their property is going to provide them. And so we have seen a lot of people in the eastern suburbs migrate to the inner west. And say, for example, what you could buy a harbourfront property for in the eastern suburbs compared to what you could buy a waterfront property for in Balmain or Birchgrove, you're buying at a fraction of the price. So, the emergence of the prestige property and it being its own market in the inner west has been significant. And so for a lot of owners that have owned substantial homes in these areas over the last 20 to 30 years, they've benefited hugely from that.
And where are they going? Well, what are they? They're vendors, but what are they doing with the $5-6 million that they just collected? Probably no mortgage left or something small. Yeah, what are they buying? They're obviously buying somewhere else. Got to live somewhere, but where are they going?
Well, they're downsizing. They might be, taking a little bit of that extra cash they got off and helping their kids.
Yeah.
The rise of the banker mum and dad has been a huge thing in the last 3 years in Sydney, and I think that's always downplayed with regards to the strength in certain pockets of the market. And a lot of them are going and then buying other trophy homes, and that's what's lifting up the area. So all of a sudden, locals are getting significant prices for their property, which means they're able to pay significant prices for other luxury homes in the inner west. And so that's been something. There's been more sales in the last 3 years at about 7 million plus in the inner west than there has ever been.
Wow.
And I think a lot of those owners are really taking advantage of that. And it's good real estate too, Mark. Like, you really have to think about it. If you're looking in Mossman, or you're looking in Vaucluse, or you're looking in Bellevue Hill, and then all of a sudden you think, okay, well, let's go over to the inner west and see what's transacting in Balmain, Birchgrove, Annandale, these sorts of areas, you're getting a lot of property for a lot less.
Yeah, so I mean, it's like the people in these environments, like as you said, the inner west, etc., are beneficiaries of the ridiculous prices of the eastern suburbs and Mossmans and all those places. They are actually beneficiaries of that, not only because someone's selling in Mossman or eastern suburbs and they're just downsizing in terms of price, but also other people who just want to come into there. They say, shit, I just can't afford Mossman and east suburbs, but I will go into Marrickville or Bandon Grove or wherever. I don't even know these places, but I will go in there because I can afford $5 or $7 million. And like, it's mental. And
you've also got to look at places like Marrickville. Up until recently, it was known that it was kind of cool out there in Marrickville, but it's been well documented. So things like Time Out magazine rating it one of the most livable suburbs in the world, and all that different sort of stuff. So I think post things like the nightlife leaving the inner city market and going to some of these other areas, that's driven people to be thinking about these areas differently as well.
Amenities. So you're talking about lifestyle amenities, all that sort of stuff. And just to finish this off, what about this whole discussion around apartments versus houses? I mean, I guess the $7 million, we're talking about houses out in the inner west, but where do apartments fit into all this? Have apartments had a renaissance in the areas that you deal in? I mean, are apartments enjoying the same, obviously not the same absolute price, but the same relative increases and the same relative attractiveness and the same relative demand? And have they experienced the same, relatively speaking, have they experienced the same increase in interest or surge in demand over the past 12 months?
No. And
that's interesting.
It's been well documented, and I do believe that's because that there's just been a greater array of buyers looking to buy homes. What I mean by homes, I include terraces in that, townhomes and so forth. And with the rise of how expensive it is to hold an investment property, you've found that your mum and dad investors that might not own 10 to 15 investment properties, but they want to own one or two for to secure their future, they just aren't buying. With the rise of interest rates, and you also got to think as well, strata levies are going up because of cost of living. It's basically taken out one demographic of buyer in that price point. I'm sure the first home buyers have been fairly strong in the last 12 months, but you can see the apartment prices have not risen at the same speed as what house prices have, and that's something that I don't think is going to change all that much. But it does present buying opportunities for people. However, it is becoming more and more unattractive for people to
because
invest.
of the cost of owning.
The cost of owning.
Yeah. So okay, that's interesting. So, but it may well represent a good alternative because you still get all the same amenities, get the same lifestyle, you get the same proximity to the city if that's where you work or wherever you want to go. I guess it's the only thing is there's a greater propensity to supply that market with new buildings because as opposed to houses, because you're not going to build new houses. I mean, I can go and buy an old house on a block of land, pull it down, build a new house. But I mean, you're not going to get new blocks of land in those inner city areas.
The one thing that no one talks about though as well is the fact that there does seem to be, I have to say, it's actually uncommon to come across a building that doesn't have some issues that need to be sorted out, which may include special levies, and that is going to be
scary.
Yes.
Yeah.
It actually is. So that is something that buyers are very, very, very hesitant about.
Yeah.
And I think that has affected prices, because obviously if there's special levies coming up or there's works that need to be done to a building and there's not enough in the sinking fund, that affects the price. It doesn't mean people aren't going to buy, but the seller might need to, say, discount their price slightly to be able to make it attractive to people. And I've got a feeling, Mark, that's going to be a big issue into the future with regards to especially properties that have been built in the last 10 to 20 years. It's only going to make Art Deco properties and properties that were built 50 years ago more attractive, because they seem to be built with a lot more quality.
Yeah.
But newer builds, that's going to be a big thing, I think, that the government's going to have to keep an eye on.
That's interesting. Yeah, you're right. The older buildings, the developer of the building could afford 50 years ago, as you say, to spend more money on the building. But now what the game is I'm the developer, how to get the biggest return out of this one. It's not so much in the price I sell it for, but it's more in my cost. So how do I increase my margin? I do two things. I try to get a bigger price, but I don't control the price. But I can control the design and the building cost. So I'm always trying to pull back stuff I don't really think I need to do in an engineering sense. And in some cases, unfortunately, these guys have gone back beyond that. They've said, well, we're not going to do this bit of engineering, even though we should be doing it. And of course, we've had those celebrated cases in some parts of Sydney. And I guess when the media gets hold of it too, they sort of amplify it a bit and makes people more cautious than they would ordinarily need to be, or definitely more cautious than they used to be. And as a result of that reflects in a discount. They just discount the price.
Yeah, and I think that there's definitely been demand there for apartments, but a lot of these things are all just small things that lead to the fact that that's contributing to the price rises not being as strong as what they have been with houses.
So, Thomas, give me a prediction, mate. Where do you think, for your area, for your domain, that is 10 Ks radius Sydney, north, south, east, west, what do you reckon is going to happen in the next 12 months? Are you expecting, let's leave units out, apartments out, just houses. Do you expect house prices to continue to climb as they have been in the last quarter, 5% increase, or are we looking at just flatlining for a while?
I'd say we're going to look at flatlining for a while.
Flatline, as a result of greater supply.
As a result of greater supply and a little bit of pressure starting to arise with regards to people being challenged with their mortgage costs.
Thomas McGlynn from BresicWhitney, one of my favourite real estate agents. Thanks very much.
Thanks, Mark.